Hello. Today we will continue with the second session of RDSP following the last time. Last time I explained the main content and provided an overview of the first RDSP. Today I will talk about the second part, eligibility, opening and contributions. First, I will explain the eligibility for joining RDSP. Above all, you must be legally residing in Canada. There is no requirement regarding whether you are a citizen or a permanent resident. You must be a legal resident. Next, you need to have a valid social insurance number. You must be under 59 years old in the year of the first contribution. However, remember that government grants and bonds are only supported up to the age of 49. The most important thing is that you must qualify for the disability tax credit. I have explained this disability tax credit, DTC, in detail in my video episode 17, so please refer to that. If the child is under 18 years old, you need to assess the family income, so the Canada Child Tax Benefit is also required. As a reference, I would like to mention that grants and bonds are calculated based on the tax return data from the past 2 years. Therefore, it is recommended to start filing tax returns when the child turns 17. This is because when the child turns 19, they can receive the correct bonds and grants. In other words, when the child turns 19, the calculation is based solely on the child's income, not the family income. So before turning 19, if the family income is high, they may not receive grants or bonds nor receive less. However, when the child turns 19, the calculation is based on the child's income. So if they are not working, they can receive the maximum grants and bonds. Then, who opens the RDSP account? If the child has a disability, it can be difficult for them to manage the RDSP account directly. So the person managing it is called a holder. Therefore, the holder is usually the parents. When the child is a minor, the parents can naturally be the legal representatives, but once the child turns 19, they need to be registered as a legal representative. If the child with a disability is able to manage financial matters to some extent, they can manage it themselves. The second important element is the beneficiary, which refers to the person with the disability. As mentioned earlier, the required documents include the DTC, and for those under 18, the Canada Child Tax Benefit is needed. The account can be opened at most major Canadian financial institutions, such as banks or investment firms. To elaborate on the role of the holder is responsible for opening the RDSP, managing the account, investing the money in it, and handling withdrawals. As mentioned earlier, when a child turns 19, they are considered a normal adult. Therefore, if they have decision-making capacity, the person with the disability can become the holder and manage everything. However, if it is determined that they lack decision-making capacity, a legal representative can act as the holder. Therefore, we usually recommend drafting a representation agreement and keeping it. I will take some time later to explain the representation agreement in detail. To put it simply, because the child lacks decision-making capacity, a representation agreement is a legal document that allows someone, such as a parent or a third party, to make all decisions on their behalf. Next, I will talk about contributions. And the most important thing is that if a person with a disability obviously cannot earn money, it would be difficult for them to contribute themselves. Therefore, anyone can make a contribution. Parents can contribute as well as grandparents. Additionally, any third party can also make a contribution. When a child turns 18, they usually start receiving or disability benefits, and a portion of that money can be intentionally contributed. The lifetime contribution limit is up to $200,000, and there is no annual contribution limit. However, to receive the maximum government support, it is advised to contribute at least $1,500 annually. So, if you contribute at least $125 per month, it amounts to $1,500 a year. This means that the minimum contribution to receive the maximum government grants or bonds is $1,500 annually. And of course, to maximize investment returns, that is, to maximize the amount in the RDSP, it is advisable to contribute up to the maximum limit of $200,000. Next, there is no tax deduction for the contributions made. This means that you can contribute after paying all taxes. Contributions can be made until the year the beneficiary turns 59. To briefly explain the account setup process I've discussed so far in 10 steps. First, apply for a social insurance number. Second, apply for the disability tax credit. If the beneficiary is under 18, also apply for the Canada Child Tax Benefit. This is because it is necessary to assess the family income. Next, the third step is that grants or bonds are calculated based on the income from the past 2 years. So, if you want to receive government support in 2024, you need to file taxes for 2022 and 2023. Then you need to decide who will be the holder. The fifth step is to select a financial institution where you will open the account. The sixth step is that once everything is prepared, you can go to the financial institution and open the RDSP. Make sure to bring the necessary documents with you. After opening the account, you will decide how much to contribute, at what intervals, and in what cycles, and then determine the method of investment. I will explain this investment in detail in the final session. And now, regarding the money in the RDSP, it needs to be used in a certain way. In case the person with a disability passes away later, or if the parents pass away, it is necessary to write and update a will specifying how you would like to support your child. Next, it says protect yourself, which means to protect the money from being misused by others through methods like trusts. Since there is a lot of content regarding wills and trusts, I will set aside a separate time to explain them. The 10th point is to prepare for the future, which refers to planning. Planning includes not only financial aspects but all elements, and in the future we will spend considerable time discussing planning. To briefly explain, it means to prepare using not only RDSP but also various other financial means and the legal methods mentioned so that our child can live happily, safely and comfortably. Well, that's all for today, and we will continue next time. Thank you for watching.